Welcome back, everybody, to Volatility Trading Strategies. So yes, this is another TVIX video. But I'm telling you, the number of people who email me and ask for advice because they're losing a bunch of money holding TVIX shares is staggering. And look, we all lose money from time to time. That's just part of the investing process. Anybody who tells you they haven't made a mistake and lost more money than they had planned on, they're just lying to you. Everybody has losing trades. That's just part of the process. But the unique problem with losing money trading TVIX is the vast majority of people out there don't even really know what it is. They don't know what drives its gains and losses. And most importantly, most people out there don't know how highly leveraged it is and just how quickly they can lose their money. So that's what I'm going to talk about today. If I can help even one person out there avoid losing a bunch of money on this insanely risky product we call TVIX, then it'll be worth it. So subscribe to the channel, smash the like button for me, and make sure you hit that little notification bell beside it. That's the only way YouTube will actually notify you when I make new videos. So let's talk about TVIX. So full disclosure here before we get started, I have never, not even once, bought TVIX shares, and I almost certainly never will. Now, I can't directly tell anybody what to do, but in my humble opinion, there's no good reason in the world why anybody should be buying TVIX shares. I've shown this before, but it's worth repeating. Adjusting for all the reverse splits it's done along the way, TVIX is down from over $2.8 billion to just over $100 today. That's not a typo or a mistake, that is real. Again, it is split adjusted, but that is the live trading performance of long TVIX. So my first question to anybody out there who's actually considering buying TVIX shares is, just how good do you think you are at timing the market? You're telling me you're so confident in your predictive ability that you would step in front of this train? Consistently from billions to basically zero in the last 10 years, and you're going to be able to thread that needle. Trust me, I'm not insulting anybody who has bought or is considering buying TVIX shares. You do what you want with your money, and I definitely hope you succeed. But in a little bit more direct way than usual in today's video, I'm going to challenge you, because there is a little bit of arrogance involved in buying TVIX shares. Consistently timing short market positions is very difficult, and the vast majority of professional investors fail at that endeavor. But with TVIX, it has a massive leverage factor, and it's nearly impossible to time correctly. So first we need to answer the question of how leveraged is TVIX. I think it's important that people know this before trying to trade it. Beta is a statistical measure of how much one security moves in relation to another. And there's two variables that it measures. The first is direction. Positive or negative beta values tell us whether the security generally moves in the same direction as the comparison benchmark or in the opposite direction. So positive beta means it moves in the same direction, and negative beta means it moves in the opposite direction. Secondly is magnitude. Higher or lower beta values tell us whether the security generally moves more or less than the comparison benchmark. So beta values greater than 1 means it moves more than the benchmark, and beta values less than 1 means it moves less than the benchmark. So the beta of TVIX compared to the S&P 500 is a very important statistic to know, isn't it? You'd never want to trade any leveraged products without actually knowing what that leverage factor is and how much it's expected to move around from day to day. So if you've bought TVIX or you're considering buying TVIX and you don't know what its beta factor is, that should be a red flag. This chart shows the rolling beta of TVIX to the S&P 500 from January 2012 through December 2019. As you can see, the long-term average is a beta of minus 6.17. The minus means that it moves in the opposite direction to the S&P 500. So on average, when the S&P 500 goes up, TVIX goes down. When the S&P 500 goes down, TVIX goes up. So it's fair to say that TVIX is a highly correlated inverse short S&P 500 position. If you're buying TVIX, you're shorting the market. And the magnitude, 6.17, that means on average it's a short S&P 500 leverage factor of 6.17. It moves on average more than 6 times the market on a daily basis. The vast majority of traders out there fail when they try to profit from shorting the S&P 500, and that's just on a 1 times leverage factor. But with more than a 6 times leverage factor, it's nearly impossible, and it's no wonder that TVIX has gone from billions all the way to just over 100. Those people who email me saying they're long TVIX, sometimes I ask them, okay, are you comfortable right now shorting the S&P 500, but doing it at a 500% leverage factor? They'll say, no, are you crazy? I would never leverage my account 500% to short the market. What if I'm wrong? But then you ask them what's their current position, and they'll say long TVIX. There's a big disconnect here, and it seems a lot of traders out there don't actually know that it's more than a 6 times leverage factor product. This is a chart of the performance of going long the SPXS, which is a 3 times inverse S&P 500 ETF, essentially a minus 3 times leveraged S&P position. As I hope you can see in the chart, it's going to be extremely difficult to time those little spikes along the way. The vast majority of the time anybody holds this thing, they're going to be wrong, and punished by a leverage factor of 3. But that's nothing compared to how much TVIX punishes traders for being wrong. This is the growth of $25,000 for going long both of these things since November 30th, 2010. SPXS is minus 3 times leveraged, but TVIX, as we've seen, is more than 6 times leveraged. And you can see it's down 99.99%. Again, I say this with all due respect. There's a little bit of arrogance on the side of anybody who thinks they can correctly time those tiny little blips along the way. This is obviously a joke, but if you look up the definition of a low probability trade in the dictionary, there's going to be a picture of TVIX next to it. And what makes it even worse is, when you're short the stock market, if it does happen to just stay flat, you're not losing any money. But with TVIX, because the VIX futures do spend most of their time in Contango, even if the markets do stay flat, TVIX is still going to bleed capital. Remember, TVIX is not a stock, and it doesn't derive its price based on supply and demand. It doesn't matter how many people buy it, or how many people think it's going to go up. That doesn't change its value. Its price is entirely derived based on a rolling of the front 2-month VIX futures, M1 and M2, and how those futures converge to the spot VIX at expiration. TVIX is not a stock. It is essentially just a formula. It's purely a representation of 2 times leverage of what I call the VX30 to VIX roll yield. VX30 is a constant 30-day maturity combined value of the M1, M2 VIX futures in relation to how many days to expiration the current VIX cycle has. This chart is the VIX futures term structure at market close on May 11, 2020. And because there's only 7 days until expiration, VX30 was 28.73, much closer to that second-month VIX future M2. Now, the VIX index closed this day at 27.57, which is here. Since VX30 is above the VIX index, the VX30 to VIX roll yield was over 4%, which means TVIX has a headwind. If nothing happens from one day to the next, and everything is held constant in the market, TVIX will still go down. And just to show how often TVIX has this extra mathematical headwind, this is the roll yield going back to the launch of VIX futures in 2004. It's only negative for very short periods of time, and that's only after the markets have already started crashing. So there's 2 major problems with trying to profit from buying TVIX. The first is, it's very difficult to successfully time short S&P 500 positions, and that's at 1 times leverage. Most people are still going to get that wrong and lose money. But the beta of TVIX to the S&P 500 is minus 6.17, meaning most people are going to get it wrong at 6 times leverage. Lots of money can be lost very quickly. And the second problem is, because of how it functions, most of the time TVIX has a headwind and is bleeding capital, even if the markets aren't going up. If it just stays flat, that's still enough to crush TVIX. Both of these problems combined, and that's basically why TVIX has gone from billions to nothing. Now, everyone's always looking for direct advice, which of course in a YouTube video I can't give, but there are a few general statements I can make. If you didn't know that TVIX is down 99.99% since inception, and that it will continue to go down like this in the long run, then you should not buy TVIX. If you didn't know the beta of TVIX is more than minus 6 times the S&P 500, and that you're essentially taking a massively leveraged position, then you should not buy TVIX. If you don't know how the TVIX derives its price, and you don't know what VX30 to VIX roll yield is or how it's calculated, then you should not buy TVIX. The bottom line is, if you don't have a long, established career of successfully timing short S&P 500 positions, then the last thing in the world you should be doing is leveraging it up by 500%. That's just asking for trouble. So if you like this kind of analysis and you want to see how I personally navigate these very complicated volatility markets, claim your free trial on my website and see if the VTS community is right for your long-term investing goals. Thanks for watching. Thank you so much for watching the video. So don't forget to subscribe to the channel and go check out my website right here. There's tons of articles and videos on there, as well as a free trial to join the VTS investing community. What have you got to lose? Come see how I personally navigate these unruly markets. See you next time.